From the floor of the CME Group, this is Danny Riley on today's Cash Close. And the name of this video, the S&P 500 futures and the 2016 downside rout. And it is a rout, isn't it? The high of the day in the S&P came in at 1943 quarter after 10 minutes after the open. The low came in late in the day at 1879 quarter, and on the 245 cash close, we're trading 1885 quarter. That's down 40.25 handles or down 60 handles from the Globex high. Okay, I got that part. Oh, man, a lot of stuff going on here. Total volume, we had 2.8 million minis trade and 6,000 big S&Ps in trade in the pit. MOC, the MIM was chopping around. It was very hard to figure out. It started out very small to buy, went up to like 300 million to buy, went back down to like 170 million to buy, and the actual MOC came out by 270 million to buy 300 million, according to Art Cashin on CNBC. I think ours was by 170 million. Now look, tomorrow, as we've been talking about, we've had a lot of Fed speak this week, and James Bullard starts out the day. We have the jobless claims number, we have the import-export prices number, we have the EIA natural gas report, and we have a 30-year auction. Now look, I don't know if you've been reading this, but some very, very, very well-known bank analysts are talking some very, very scary stuff for the stock market. One guy today, I can't remember what his name is, put out something about going all the way down below the credit crisis lows. And Morgan Stanley just came out late in the day, warning to cut exposure in tech and lowered their exposure in tech stocks. I didn't catch it all because I was getting ready to do the vid. But at the end of the day, the S&P closed down 2.41%. The Dow closed down 2.25%. The NASDAQ got whack old. It was down 3.35%. And oil, which was actually trading lower on the day, rallied late in the day to close fractionally higher. Now look, there's a lot of stuff going on here, and I don't know if it's all good for the stock market right now. When you get so much negative overtones and you get so many failed rallies, we couldn't hold 2,100 in the S&P. Then we couldn't hold 2,000 in the S&P. And now it looks like we're having a problem holding 1,900 in the S&P, which can't be good. It just can't be good. And furthermore, the Pitbull has been warning me for at least 2 weeks that when he looks at his charts, he keeps seeing these downside gaps. And he's very good at reading those charts, and I get concerned about that. And I think we filled one of them today, but I know that there's another one down at 1861, and then there's something all the way down at 1831 or something like that. So this really can't be good. This can't be good. And in addition, like I said earlier in the week or last week when George Soros came out and said, well, this is the worst start since 2008. I got to say, like I wanted to say on that video that we missed, I'm sorry, George. This is a lot more severe than what started out in 2008. But anyways, look, another little point I want to point out, Twitter. We got down under $19, $18.64, and Microsoft's talking about buying the company. I'm not sure. One of the problems that we have with the Twitter, and we're trying to resolve right now, is how to monetize it. We work our butts off with it, but we don't seem to be able to make any money off it, and I'm sure that that's exactly the problem with the company itself. And if I were Microsoft or any other suitor that wanted to buy that company, I'd hold off on a little bit. If the stock market really goes lower, Twitter could go a lot lower. But look, at the end of the day, we've had a couple days of up, one day of up, one day of down, one day of up, and we're kind of back into that cycle during the expiration week. But I got to admit, based on the way the futures sold off, they did rally a little bit here late in the day, but not very significantly. Things just look bad. And My call today was to sell the early rallies and buy weakness, and my call yesterday was to buy weakness. These are not very good calls, and you know what? At the end of the day, I got to be honest about it. I did okay yesterday trading, but then today I lost, and then I made it all back. And then late in the day, as the market started tumbling, I, like a lot of other people, tried to buy it a couple times and just got run right over. But again, I got right out because you know what? I think that's what all this is about. You can make these bets, but if you're going to sit around and hold on to this stuff, you're not going to be around very long. We're going to leave it like that. Markets don't look good, but we've been in an up and day, down and day price action throughout the week, and who knows? Maybe we go up again a little bit tomorrow, but I'll tell you what, these are very, very ugly failed rallies that we're seeing. We grind higher, and then we rip lower. We'll leave it like that. We'll see you guys tomorrow on the opening print.